Welcome back, everybody. If you're new, my name's Nicholas and this is Investing Against the Grain. Welcome to episode 69. And we are off to a great start this week. Monday morning, Tesla looks like it's going to have a nice day. As we have seen over the past few weeks, Mondays tend to be a very strong day for Tesla, not only stock price, but also with volume. So those are very bullish signs. In today's episode, we're going to touch on some very bullish news that's coming out. The first has to do with the opening of Giga Berlin. I'm going to talk about what that means on the bigger picture for Tesla, for the Tesla stock price moving forward. And then we're also going to take a look at an email that Elon Musk sent internally to all employees. And again, I think this is a very bullish email, and we'll analyze that a little bit and talk about what that might mean as well. And then if you stick to the end, I'm going to go into a little bit about what my current strategy is. As you all know, I believe in long-term holding, okay? Buy, set, and forget almost, right? I believe in investing in a company with a premise of 5 years at the minimum, okay? That's the minimum I think you should hold a company. However, if you have listened to any of my videos lately, I've been talking a lot about all these call options I'm accumulating. So I'm going to talk a little bit about why I'm doing that, what I'm doing, and how I'm hedging the effects of something like theta, right? That time decay, and how that can potentially be a strategy that you could use moving forward. Again, none of this is investment advice, just one engineer sharing my story, my journey with all of you. Before we get into today's content, don't forget, we have a merch store now. It's live. You can get cool stuff like this if you're interested. And also, don't forget, hit the like button, hit the subscribe button, ring that bell, and let's get into it. As you can see from this article from Teslarati, headline reads, Tesla Giga Berlin's full approval to be granted in a few days, report. So this happened over the weekend, really over Saturday and Sunday. We start to see all of these rumors and articles coming out about Giga Berlin finally getting approval to open up and start production. This is a big deal because last we heard was that the whole process where the general population of the area with all of the environmentalists and the pushback against Giga Berlin opening, we were told that that might last another month, right? They might go through a whole another month of objections and listening to the public and the hearing and all the, just honestly, the drama and BS going on with that. This would be the third time they've done that. The first time they did it, it turns out that there was some mistake happened. They didn't go as long, or they didn't start the date on the right time, whatever. So then they went through the process again for another month. And so now we just got to the end of that. And then there was a rumor saying that they might have to do another month of objection listening and given a chance to have some more arguments presented. But then this came out, right? And this is a big deal because this is essentially saying that internally there are rumors going on where it seems like everything's set and done. It sounds like Tesla's going to go ahead and get all the permits officially signed so they can start their production. This, I think, might be what the whole 12-9 really is. I don't think it's going to be a stock split at this point. Just the timing just seems way too coincidental. This is coming out. I think Elon knew internally that December 9th would be the final approval or the first day that they can actually start production. And so I think that's the hint that Elon's been trying to give us this whole time. So I think that's very exciting. I think it's very bullish. If that's the case, I do not want to be someone, personally, I would not want to be someone who's not owning Tesla whenever those approvals go through. Now, we did get more indication as to what this ramp will look like. And it seems like the initial release or the rumors are saying that Tesla will start off with a production ramp of 1,000 vehicles per week for the first 6 months. All right, so that's that tells us a little bit about how it'll go. I think that's fairly conservative, to be honest. I think Giga Berlin's going to ramp a lot faster than that, but I think, if you're going to have any numbers out there, it's best to start small and conservative. We've seen that with Tesla do that time and time again. We saw it with Shanghai. I think we'll see it with Berlin. We'll see it with Austin. The bigger point of this is that we're going to get started. Now, keep in mind, just because Giga Berlin is going to start production, and they'll probably start deliveries in January, I would imagine, that doesn't mean that we're not going to be getting any more imports from China. Okay, I think what we're going to see here is a very similar process as what we'll see when the 4680 batteries are ready. So Giga Berlin is going to slowly start to come online. And as Giga Berlin slowly comes online, you'll see Shanghai slowly stop exporting as many vehicles to Europe. But until that happens, it's going to be this balance between Berlin and China. So as the ramp goes up with Berlin, the less vehicles need to come from China. The same thing will happen when the 4680 batteries are ready, right? As soon as the 4000 series are ready, we'll be able to start supporting some of that. It means we need a little less 2000 series batteries, and eventually the 4000 series can take over for the 2000. And I think that's how things will move forward for Shanghai, for Berlin, the batteries. I think it's going to be the same playbook. It's going to happen over and over. And it's smart, right? It's taking a measured approach, and it's using the supply that you currently have so that you don't have any disruption to the end users or the end customers who are ordering their vehicles. So that's extremely exciting. I think that is what the December 9th announcement is going to be. It might be on 8th, it might be on 10th, but I think roughly around 12/9 is when that's going to be. I'm still hopeful for a stock split. That'd be amazing, but it's seeming more and more likely that this is what Elon was hinting at. Okay, next up, I want to talk about this letter that Elon sent internally to all employees, this email. So let's take a look at that. On November 26th, Elon Musk sent this internal email, and I've highlighted some points I think are very impactful. It says, per my email several weeks ago. We'll just start off there. What this tells us is that what he's about to say in this email is something that isn't just happening now when December's about to start. This has been the same message that they've been talking about internally nonstop. So the fact that we're seeing this email now does not mean that this is the first time this has been discussed. It doesn't mean this is all of a sudden this is the moment where they're trying to pivot their strategy on how they do end of quarter sales and deliveries. Instead, it tells us that this is something that they've been thinking about for a while now, and they're implementing, and all Elon's doing here is reiterating the message. So just use that as how we level set and how we start off this email. Our focus this quarter should be on minimizing cost of deliveries. Again, highlight this because that's important. What they're focusing now on isn't so much on just getting goods into the hands of owners. What they're focused now is doing things the most cost-effective way, where we can get the most margins for what we're doing to be the most efficient. The most cost-effective results in the best value for the company itself. Rather than spending heavily on expedited fees, overtime, and temporary contractors just so that cars arrive in Q4. What has happened historically is that we sprint like crazy at the end of quarter to maximize deliveries, but then deliveries drop massively in the first few weeks of the next quarter. In effect, looked at over a 6-month period, we won't have delivered any extra cars, but we will have spent a lot of money and burned ourselves out to accelerate deliveries in the last 2 weeks of each quarter. I think from a CEO perspective, this is very positive, and it's such an understated ability to understand the company and your people. So on the one hand, as a CEO, and Elon essentially is the majority holder of Tesla, right? So Tesla is his baby. But as a person of that power, to understand obviously the MBA side of things, right? The spending, are you really getting the most out of every dollar spent there? Is there any huge gains to be had? And clearly there isn't, right? Because they deliver all these vehicles at the end of the quarter, and then at the beginning of the next quarter, everything slows down because everyone's burnt out. But more importantly, your human capital, okay, the morale of the people, the fact that people are getting burnt out at the end of the quarter. I work for a company that's very similar, where we always have an end of quarter push, and this does tend to burn people out, and then people take that that week after of the next quarter that starts, they just take it off, and everything slows down, and it's kind of a rebuilding. What Elon's saying here is, why don't we just keep everything flat, right? Keep everything kind of a normal run rate. Let's not exhaust our people. Let's not spend money we don't need to spend, because we're not really getting any net benefit from it. It just looks good for a quarter, but it doesn't really have any meaningful improvement or margins or anything for the business itself. So let's do the smarter thing, not burn our people out, not waste money for a net no benefit other than for Wall Street perhaps. And so I think this is a very understated look into how Elon Musk thinks. And I think it's something that more CEOs in the world and many companies should take this approach. I think if you took this approach, you'd have better benefits, you'd have better culture, you'd have better retention of your employees. Continue on here. We still have quite a big wave of deliveries in the last few weeks of December. So this is still telling us not that, if you read that before, you might have thought, okay, this means Tesla's going to take the foot off of the accelerator and just, try to coast through December, coast through this quarter, so that they don't have any crazy end of quarter, end of last month of the quarter, push or press, right? And here Elon's saying that's not the case, that there's still going to be a wave. The wave's inevitable. It's going to come. It's still there in December. But the whole idea is that over time, we're trying to make it so there aren't these waves. Instead, it's more of a placid outlook on the horizon. As we don't yet have high volume production in either Europe or Texas, which means a lot of cars on boats from China to Europe and on trucks and or rail from California to the East Coast arriving late in the quarter. But this is nonetheless the right time to start reducing the size of the wave in favor of a steadier and more efficient pace of deliveries. This, to me, this is the most important line of this entire email. And, I just wish more CEOs would say this. I wish I could scream this at the top of my lungs to every company out there. Elon says, the right principle is to take the most efficient action, as though we were not publicly traded and the notion of end of quarter didn't exist. Thanks, Elon. This is such a profound, this is what makes Elon and Elon companies different. They are going to take the approach that is not about the end of the quarter. It's not about the analysts. It's not about Wall Street. Instead, they're going to do the right things for the right reasons. And you know what happens when you do that? The money follows. The sales follows. The demand follows every single time. Not once in my life, not a single company I've ever studied, when they do the right things and they don't focus on the money, it just comes, okay? This is something that we tell kids nonstop. Don't worry about making a lot of money. Find your passion, find what you enjoy and what you're good at, and the money will follow. We tell that to all these kids as they grow up. And then here we have the CEO of one of the largest companies in the world, the most innovative company in the world, in my opinion, saying this to his employees. That's what he's saying here. This is powerful, and this is going to have major implications, not only for Tesla as a company, but for us as shareholders. Okay, the ability to steady out the wave and to have something that's more consistent, something that's more linear, I think we're all going to bear the fruits of that in the long run. So as I mentioned at the beginning of this video, I have not been buying any Tesla stocks for quite some time now. So probably for about 3 months, I haven't been. Instead, what I've been doing is I've been buying call options. Now, again, the whole thesis of this channel is to buy into companies where you plan on holding for a long time. And really, long time isn't that long. Long time is only 5 years, which may sound like an eternity for a lot of you, but it really isn't. That should be the bare minimum of what you use as a yardstick for measurement on whether or not a company has met or succeeded into your thesis, right? Whatever your thesis is for that company, did it result? Did it come out? If it did, great. If it didn't, okay. But to me, 5 years is that level of where we really determine whether or not we should stay in the investment or get out of the investment. So with that said, why am I doing call options if I have such a long-term perspective? Well, the truth is, I still am very long with my calls. So the majority of my call options right now are leaps, and many of them at this point are deep in the money. So if you're not familiar with what a leap is essentially just a call option, but for a longer period of time. So my leaps are 2 years out. I guess now they're about 1 year and 7 months out. And at this point, they're deep in the money from when I bought them. So in other words, they have become very, very profitable. Now, I have been buying some more aggressive call options lately, which again, I still take a longer perspective when it comes to calls. So these call options are about 8 months out before they're due, and they're not that far from their strike price. So the majority of these shorter term calls, right, shorter term, 8 months out, are for a strike price of $1,200. Okay, so at $1,200, we're currently, maybe $50, $80 underneath that $1,200 mark. I think this is a very conservative investment. Okay, so why am I doing this though? Why call options? Nick, why not just go ahead and buy shares? Well, the reason is I think there's so much to be bullish on right now. I think the next 3 months are going to be insane for Tesla. There's just too much good news, too much that can happen. I want to have as much leverage as I could to reap the upside of these investments. And so what am I talking about? All right, first things first. 12/9, whatever happens 12/9, whether it's Giga Berlin, whether it's split, I don't really care. I think something is going to happen, something will be announced, and frankly, I do think it's going to be Giga Berlin. I think Giga Berlin opening up is going to be such a bullish announcement for Tesla that you're going to see a lot of people come into the stock. And then we're going to have, just in general, the Christmas rally, the Santa rally. Okay, we tend to see this almost every year, where towards the end of the year, we see a rally in the stock market. And so I think that's going to happen again. What else do we have? Well, we also have Tesla's end of quarter numbers. Okay, so shortly after the end of the quarter, we'll get Tesla's Q4 numbers for deliveries. This number, I believe, will be massive. And the fact that it'll be massive, again, will have a positive sentiment to the stock price. Well, then we have Q4 results. Okay, these Q4 results one will probably be record again, right? I've been saying this over and over. We're going to have record quarter after record quarter every single quarter. It's going to happen from margins to revenues to deliveries. It's just going to keep happening. And I think we're going to have it again. And I think that's going to be a positive for the stock. And that'll happen in January. Now, during this time frame, right, we'll also be getting more news from Berlin, because if production starts in December, we'll probably start seeing some actual deliveries from Berlin in January. You don't think that's going to be good news for the stock market? I think it will. And then we have anything that might happen with the 4680 battery, right? Any news, any development of the 4680 batteries, which might come in way of the Q4 earnings call, right? We might have Zach give us some more updates. We might have Drew give us some updates. You don't never know, right? These calls can be a little bit unpredictable of what will be leaked, what will be announced. Then we also have Giga Austin. Let's say that Giga Austin doesn't start production until January, right? We already see all these permits being sent off and paid for from Tesla in Austin. It's inevitable, okay? This is coming. Austin is getting ready. So I think come January, production will start. February, we'll start seeing some deliveries out of Austin. So we just have so much going on here. And then don't forget, we're not even talking about full self-driving. Where's full self-driving at that point? We have seen the crazy improvements from 9.0 all the way to current 10.5 version. The pace of improvement is just growing and growing. And I think this is just going to continue to go on. It's going to be more and more bullish for the stocks. It's going to be more and more bullish for Tesla. It's going to be more and more bullish for the thesis of self-driving, full self-driving. It's going to be more bullish for the thesis of robo-taxis, and that's going to be inevitable. So I think there's a lot that we have as far as tailwinds to go into the end of the year, into the beginning of the new year. So with that said, that is why I'm putting money into call options. Now I have these longer out so I don't get bit by theta, that's time decay. So essentially with call options, right, time is against you. So it's not like a normal stock where you have essentially the ups and downs where the stock can go, but you also have time working against you. The further out you are, the less you have that impact of time. And so that's why I like to take these longer horizon views when it comes to my call options. Now, with that said, I'm also able to take a smaller amount of money and leverage it to get more in returns, right? Now, this can work the other way around, or the other way as well, where I could lose everything. But my goal is to take a little bit of money and stretch it out to be even more when it comes to the profits. And so that's why I'm going for call options. I'm extremely bullish into this end of year, into the beginning of 2022. 2022 is going to be a massive, massive year, which is why I also have a whole bunch of leap contracts right now, call options. So the story here is that, yes, I think if you're going to buy shares, you need to be very long. I think you need to be long-term thinking. I think you should be long at companies. Don't think about the short-term horizons. Don't think about day trading. Don't think about swing trading. If you want to get into call options, that's fine. Again, none of this is investment advice, but what I do, just for my own sanity, is I like to pick longer-term horizons so that I don't have to worry about theta as much, that time decay. Now, with all that said, you have to do what's right for you. You have to do what's right for your own risk appetite. For my risk appetite, I have less than 10% of my portfolio into call options, okay? Which, that might seem like a lot for some, might not seem like a lot for others, but it's my risk appetite. And I'm also in a different position than some of you might be. I'm financially independent, so I'm not really in this place where if I lose that 10%, it's gonna ruin me. Okay, if I lost all that 10%, yeah, it'll hurt. I won't be happy about it, but it's not something that's going to ruin me. So you also have to take into account what, your life and your bills and what you have going on. So we're going to leave it there. I hope you guys enjoy your Monday. I hope you have a great week. Don't forget to hit the like button, hit the subscribe button, ring that bell. I love you all. As always, peace.